All right. Hello, everybody. Okay. We are on.
Hello.
To everyone who, I put the Tuesday tune ins for 7 o'clock. But, guys, as you all know, when it comes to technology, it never works the way that you want it to.
Exactly. Exactly.
And so we'll
But you
see if we
good.
can.
You good with it though, Angelina. You were good
Oh,
with it.
thank you. I'm
Yeah.
trying my best. Um, I'm trying my best. I'm just making sure, sit
Okay.
that clicks,
There we
of course,
go.
that's
I
all
see it.
this come on when I'm getting on live. So,
Hello.
Ron, first of all, I got to tell you, thank you so much for coming on. I
My
know
pleasure.
coming in, and so that way we could be able to see. Guys, if you are joining us, I have Mr. Ron Williams he's the branch manager for Silverton Mortgage. Gosh, Ron, we've known each other for how long now? Oh man,
Well, it's been several years, and we've
yeah,
known each other. We actually met each other, Angelina, I think, um,
at
through a
Miss Tina's
mutual client, Miss Tina's house. Yeah, we didn't do business together at that time, but you changed the life of someone that was that is very special to me, and you were just an incredible gift to her. And sometimes we don't know just how much we bless people when we help them get a house. And at that time, we didn't do business together, but I knew of you, and it was a pleasure meeting you. And that's probably been what, maybe 15 years ago now, or has it been that long?
it's probably like nine. I want to say nine because it was right after, right at before they got married.
Yeah,
Um,
yeah. So it's
so
been quite, yeah,
yeah, it's been a while, and
absolutely.
and guys, it's crazy. I met him, and also I think Miss Sheila at the same time. That's when guys
Yeah,
Ron was working for DHI, which is the lender for DR Horton.
yep,
And I had no idea all the things I could do until Carlos worked with him with another agent. And how we came about working together, Ron, was for those who don't know, my background is in foreclosure. You probably heard me talk about it.
right.
I couldn't tell everybody what I did because for the longest I worked for one of the biggest law firms that dealt with foreclosures. And I also my specialty is I was helping a lot of veterans avoid foreclosures. Well, it was time for those veterans to start purchasing their properties. And for those who don't know, if you are a veteran and you've had a situation where you've either had a foreclosure or a deed in lieu or a short sale, it's imperative that you get a lender that knows how to read the eligibility. And
Right.
I ended up having a client that was getting approved, and they wanted her to bring out his money. And Carl was like, "Why don't you call Ron? He just did a VA loan." And I said, "I'm going to call him and have him look at this." And sure enough, guys, since then, I I guess Ron, you've worked on like my own personal homes, investment properties. You've helped my family.
Right, right. And
um,
so many
oh,
of your clients that, I mean, it's just I don't even know what the numbers are, but I can tell you
yeah,
one
yeah,
thing, it's always really a great joy to work with you because of your professionalism. But I think the thing that stands out to me the most about working with you, Angeline and Carlos, because you all a great team. It's not just you, but it's the duality. But the
yeah,
thing that stands above everything else is your passion, your care for your clients, and how you do not give up on a client. I can tell you no, Angelina, it's not gonna happen. It's not, but you're gonna circle back and you're gonna come back and you're gonna say, Ron, yes, what about this? What about the other? And and it's that type of passion that if I'm in the market to buy a house or if I'm gonna sell my house, that's the person that I want working for me because none of our situations are perfect and we all come to the table with some flaws or we got some cracks in there, we got some seams, and nothing is perfect about it. And so I want someone that understands that in a non-judgmental way, and that's going to have my best interest. And I see that literally from the time we started doing business on that very first deal to till recently, our more recent closing just a week ago, or not even a week, just a few
Yeah,
days
just right.
ago. Yeah, and that was a client that we started with over a year ago, if I'm not mistaken. It's got to be
Yeah.
close to a year. Yeah,
It was no, it was over a year ago. Their
right,
agent found me on Google because they
right.
were
That's it.
country. So their agent saw the reviews on Google of me, and she referred them to me. And then from there, we've been working. But they were so happy, active military client, and that's what it's all about. From what
Yes,
I saw, that's what it's about. Um,
right.
Thank you for letting me nag you, because guys, you all don't see all the
Yeah,
the communication that as agents and lenders we all have. Like, you may
right.
take from that lender that one time, every week or so, but we're literally, as agents, we're calling and speaking to lenders a lot.
All the time. And
Probably
doing it
more
day
than
and doing it both day and night. The thing
yeah,
is, our jobs are not 9 to 5. Our careers, our profession is not a 9 to 5 or a 7 to 3:30 or a 8 to 5. It's 7 o'clock. And what are we doing right now? We're trying
yeah,
to help somebody. What do we do when we get off the phone tonight? We'll be back trying to help somebody. So yeah, that's the effort that is put forth. And I tell you, I work, as you very well know, with a lot of different agents and from across, not just locally, but from across the country, across multiple markets. But not a lot of them do what you do. A lot of them, they are on that 9 to 5 or 8 to 4:30 cycle, and Monday through Friday. And that's the time of the year. But it's special when you got someone that is going the extra mile. Once again, that's what I would be looking for in a client, and that's what I appreciate about working with you.
oh, thank you, Ron. And I
Yeah,
and I I appreciate you as well, because one of the things Carlos and I, we tell you this all the time, is how I don't know what you do, but I know you're doing something
yeah,
on
yeah,
in the backfield. And then the way that you also, and this is very important, guys. I know we're talking about interest rates. We're going to get to. I'm so sorry for
yeah,
everybody's coming, but I have to say this because I'm experiencing this now. I appreciate how you take care of the clients when it comes to providing information for them, because not all lenders do that. They don't consider the client's feelings. They don't consider the fact that this is the buyer's first time getting a home. They don't consider that they're nervous. They don't consider that they're trusting us. And this is probably one of the biggest investments that they have. You give such a comfort to clients when you're speaking to them, even if it's an issue. There's a way that you're able to respond, and it's respectful. It's never condescending, and it's never as if it's that you don't care. It's with some sort of type of sympathy, like, hey, I'm here, I understand what you're going through. Now let's talk about what we need to have done. And
yes,
I can tell you now, guys, that's not every lender's how they character, as far as deliverance. Excuse me, let me not say character.
right.
It's not every lender's deliverance of a delivery of when it comes to those things. So thank you for that.
Yeah.
And also,
Well, I appreciate that, and I value that, Angelina. It's good to hear from the other side, because oftentimes, we that's that's our attempt. That's what we want to do. I'm a biblical person, so I always like to incorporate my spirituality in what I do in many regards. And one of the things the Bible says that in all of your getting, get an understanding. So what we try to do is to impart understanding. We recognize that they don't understand that when you're getting a loan and when you're going through the home buying process, it's a form of financial surgery. It gets bloody, it gets ugly, it's some things got to be shifted around, and we're into all parts and all aspects of your life. And so when you go to a doctor and if you ever had surgery, I want him to take me from zero to recovery to my journey back home to everything is done. I want to know. I want to be educated about it. And so that's how we look at it here. We embrace it from that standpoint that we want you to understand the process. Whether, some people are less challenged than others, but it doesn't sidestep the fact that they understand and know what we do. So that's what our job is, and I'm happy to know that you're getting feedback from your clientele that we're providing that for them.
Yes, and we even have we got Marinelle on. She says absolutely. So many millennials do
Hey,
not wrong with you. Ron and Sheila will answer your questions and answer your calls.
yes, yeah,
How you
Sheila's
doing,
better. Sheila's better at that part than I am. I'm a little bit slower sometimes. She's got a she got she got she has a faster trigger than me, but that's because I'm deeper in the trenches, and I always tell Angelina, I say, Angelina, look, if you don't hear from me today, don't worry, because I got your file in my
working,
hand.
working
I'm
on the
I'm
file,
work, and
and
I
that's
would
exactly
never
what
fail you.
you. Well, guys,
Yes.
and guys, that's just a small description, honestly, testimony of what Ron does. One of the things too is that if you don't know, I know you all are aware of Mungo, and Mungo is one of the biggest builders here in South Carolina, and
Hmm.
new construction builders. Well, he's also one of the branch managers for Mungo, so
Hmm.
that's another thing. He also deals with a lot of new construction. If I have anybody that's purchasing Mungo, I don't care what subdivision they're at, I'm going
Yes.
right here this way. Oh, hold on, this way.
Absolutely. Yeah.
I'm
Yeah.
like,
Whichever way.
I'm going this
Exactly.
way.
My left
Wrong.
is right. My right is left
Yes, I
on
gotta
that one.
remember
Yeah.
which way. I try not to mirror it because it flips everything weird. But
Yes.
uh, but yeah, he's the person who I go to because he just gets done. And one of the things, Ron, that I want to talk to you about because I love having our discussions, guys. When Ron and I actually
Yes.
get on the phone, it's normally Ron, myself, and Carlos. When we get on the line,
Right.
we're always talking about market updates. And so one of the things that
Yes.
we want to talk about today, and I wanted Ron because he's the master of this too, is interest rate
Hmm.
drops, and also the market updates. And so I wanted to kind of get your spiel in regards to from a lending standpoint, because people hear the rates drop, they
Right.
hear the reserve is going down, but they don't know how that actually impacts them. As soon as people hear about rate drops, they think, oh, it's gonna be 2%. Guys, we're
Yeah.
not gonna see that
Yeah.
2%.
Right.
Let me start off by saying first disclaimer. We do not have options of 2% right now. Trust me, as if we do have options of 2%, you will be the first to know because we will be on here blaring and blasting that we got 2% rates. But
Right.
even though they're not 2%, we want people to kind of understand kind of how the rates do affect them and what that means on a payment standpoint for them. Don't be afraid either because they're not 2%. And so, Ron, if you
Right.
don't mind just elaborating kind of what that means, so to speak,
Sure.
when it comes to the rates and such, I greatly appreciate it.
Well, first of all, Angela, let me say this. You mentioned the Mongo aspect of what we do. And I think you said that Mongo is one of the biggest builders. I'm going to change that and say we are the biggest builder. I'm just kidding. I just thought I would put that in. I
Okay.
will I will say this. The builder report came out today, and we are the dominant force here in Columbia. We do have more building permits and more starts than any other builder here in the Columbia Lexington market. So we are the biggest in terms of that. But all the other builders are great too. My son works for one and my daughter-in-law works for another. So we kind of got a new construction family of persons that are working within the industry in terms of that. But let's talk about this rate piece. This rate piece is quite interesting because everybody knows that during the COVID market, we experienced that timeline, just as you mentioned, that we had rates 2, 3%. But that was driven, as many of you may know, and some may not know, it was driven by the catastrophic circumstance of a pandemic. So we were out of what is a normal market. The world was shut down. People were locked in their homes, and the economy basically stopped. So, what undergirds our economy in a tremendous way is both energy, number one, and then real estate is right there. Those are the two things that fuel our economy. So, in order to keep the money moving, the Feds, basically the Federal Reserve, when I say Feds, they cut interest rates to a 0%. Now, that 0% from the Fed perspective does not equate to 0% for you or me. That's the margin that lending institutions are able to purchase, to obtain funds to loan from the Federal Reserve. How economics works is that banks and lenders obtain funds from the Federal Reserve at whatever interest rate the Federal Reserve has tagged at the time. And so when it went down to zero, that allowed banks to be able to say, hey, we got free money. We're going to loan it for you 2%, 3% in the housing industry. That's what drove that rate market. But now we know we're post-pandemic. So we then evolve. I hope I'm okay to explain it this way because, again, I like to give Okay, okay, perfect. So I like to give understanding. So then we evolved out of the pandemic timeline, and now we come to the post-pandemic era. You and I did many lives on the post-pandemic market. So what has occurred since some of those is that the Fed rate has went from zero and have escalated up to some 4 or 5%. So that in turn drives rates in the consumer market to where we were or have been and are. We 7%. It had gotten as high a few weeks ago, month ago, or maybe a little bit longer, almost at 8%. And that was because the Fed then turned to a position, the Federal Reserve, again, I still use that term Fed, turned to a position that we've got to slow the economy. So it's going too fast and it creates inflation. And because of inflation, we were paying more for groceries, we was paying more for everyday consumer goods. And the only way to bring that down is that the economy had to be slowed. So how do the Federal Reserve slow the market? They slow it by raising interest rates. Rates go higher. You can see my finger, I'm going higher. Okay. Yeah. So it goes higher. So that's what drove interest rates up to 7%, almost 8%. Now, here we go. So what has happened since that time? The market has kind of reset, and now the inflation number is coming back down, and it's less than the 4% that the Federal Reserve was aiming as a target to get it to. So now we're at that place. So guess what? On Friday, September the 20th, it is said, or it's believed, we don't know for sure, that the Fed is going to issue its first rate cut of 2024. That rate cut is believed to be 1/4%. So 1/4%. It's not a very big cut. It's a small cut, but it's enough of a cut for banks to begin to relaxing interest rates and bringing rates down. So we're already seeing that because what happens when the market reads that the Federal Reserve is going to cut interest rates, it starts to get baked into our system to consumer rates before it happens. So today I was locking loans at 6.25. I was locking a few loans a little under 6%. So that's where the rates have kind of gone to. So now, if the rates go, if the Federal Reserve decides to cut the rate more than the anticipated 1/4%, and they cut it to 0.5%, we believe we'll start seeing rates in the mid fives, possibly even below. So that's where we are with interest rates.
And those rates that you're giving, that's kind of what you're seeing more on a conventional standpoint, because normally FHA would be a little bit lower, won't they, from the
Right.
conventional rates.
So what I'm quoting today at about a little beneath six are government loans, FHA loans. We're seeing that on FHA. On conventional, that's more toward that six and a quarter or a little bit higher, depending upon the type of conventional. We've got now, Angelina, where there's different segments of conventional. So we've got what we call a home ready loan. It's an affordable housing loan where our servicers are seeking to give certain discounts based upon certain buyer criterias. So if your income is a certain place and you're on a conventional loan, you could possibly qualify for what we call a home ready loan. Home ready, it would be priced interest rate wise a lot lower than a traditional conventional loan. So there's separate tools that we look at that when a person doesn't, when you send your clients to us and we receive their application, what we do is we vet that loan through every type of loan option that we have available. Because what we're aiming to do is to get your client the best loan option. It may be conventional, it may be FHA, or if they qualify for a VA loan, could be a VA, or even possibly if it's in a right location, it could even be a USDA loan. So we're looking at all options when we get a loan application so that when we come back to you and we say, hey, this is what we can do, we're going to try to find that loan that best fit your criteria to qualify you for the best interest rate and the down payment that you can afford along with it.
Now, and and also, can you elaborate more too that with those
Hmm.
rates that there are ways that people, because we have a lot of people now, we have a lot of people who purchased at that time and they have the 3% interest rates, but guess what? They're like, Angeline, I'm ready to move. And
Yeah.
so I'm telling people, I'm like, hey guys, you purchased prior to inflation.
Hmm.
Let's look at numbers. Let's look at what your equity is in the home. Can you explain of how people who are currently in homes who
Hmm.
already have low interest rates, because you have people who do have that fear because they're like, Angelina, I just
Right.
have such a great rate. I don't want to leave my house. I don't want to leave my rate, but I'm ready to leave
Hmm.
my house. Can you kind of
Right.
elaborate of how they can be set into a position, they can position themselves, excuse me, to be able to maximize out using their equity to put themselves in a great position and take advantage of the drops that are going on?
Yeah, well, and you know that has been the big concern for many of us. I'm one of those that have that 3% rate base, and man, it would be hard for me, to consider uh, going to another option. However, that's because I'm at peace with what I do have. It fits all of my needs and it checks all of my boxes. But that may not be the case for everyone. They may be in a situation where your job is relocating. They may be in a situation where, you have stairs in your house and you can no longer operate with a master being upstairs. You need it downstairs. So what you have, though it fits the payment point or the rate factor that you want to be at, it's still a problem because it doesn't settle the needs that you have. So there are ways that you can look at it now that gives you a lot of options. Number one, you can always buy interest rates down. And let me tell you, part of this rate cut is permitting people to buy rates down to a position that is a lot that's putting them near where we once were during that pandemic market. I will
Okay.
say this, Angelina. I think we got to, one of the things we have to educate people too is what I said earlier, is that that market was brought about because of catastrophic circumstances. So,
Huh?
if you're waiting for the rates to go back there, then you're going to be waiting for a pretty long time. It's just not going to happen unless we have another catastrophic event that shuts the country down the same way that causes the economics not to move. But if you say, hey, I need to get out of this house, I got equity, now you can sell your house for much more in value, as you very well know. That's your side of the game. That people, are coming away with enormous amount of cash in terms of selling their homes, so they're able to come into that new loan, buying the rate down, positioning themselves to be in a financial place that's not much different, perhaps, from where they were. Let me give you a quick example. I locked someone
Oh,
and they no, I'm sorry. It was an FHA loan. It was an FHA loan. They were selling their current home and they were buying a new home. Now, shameless plug, but was a Mongo home. This was a Mongo home, and they had about $13,000 in incentives, but we were actually able to buy that rate down to 4.4%.
huh.
4.4 on an FHA loan in this market right now, and we used all of the builder's incentive in order to make that work. So it didn't cost them out of pocket. So the good part about it is when you have the right agent and the right financial team that are working for you, we are able to give you options like that can give you choices where you don't have to believe or think that I'm locked into what I have. No, what you're
Exactly.
locked into is a way of thinking. But if you give us an opportunity to show you a new way in a more perfect way that's available now, that's also getting better because it's that's why I'm kind of going through my pipeline thinking about people that were sitting on the fence and were saying, I'm going to wait, I'm going to wait. And I'm telling them, hey, this is your opportunity. This is your chance. Can I say this, Angelina? Because I think this is important to understand. This is a piece that's a part of that understanding that we need to have. Everybody, when we went from the 3%, 4% market to the 7% market, everybody got upset about that. They were mad because people felt like, you know what, I can't buy. But let me tell you what, I probably, and I think I made you as excited about it as I was. And the reason why we had excitement about seeing interest rates go up is because we were able to qualify people that we could not qualify when rates were at 3%. They were locked out of the market.
Yes.
Yeah, they
And
were
and people
locked out.
they loosen the strings, you know?
Right. Right. So no longer were we dealing with multiple offers. No longer were buyers having to pay ten, $15,000 above sales price. No longer my buyers that only had enough money to do down payment assistance and a little bit of money that they've saved from a few paychecks to try to buy their first home. They were squeezed out. Now I'm getting them in. Now we've gotten them in and we're continuously getting others in. And guess what we're doing for them? They are getting ready to capitalize one of your clients. I'm going to give you one of your clients that we closed December of last year, that we worked with them for about a year and they closed at a little bit above 7%. I'm getting ready to close them on a refinance at 5.5%. And it worked just according to the plan that we outlined because they had a team working for them in the beginning that we worked together to collaborate, and they understood that there were steps to the process, steps. And now we're getting ready to take another step to get them to really the place that they want it to be.
And I think I may know who you're speaking in reference to because I'm going back to everybody I had in December. And if it's who I think it is, they got in prior to, whereas the home that they purchased, probably if you look at the equity in it,
Yes.
instead of having to pay uh, 10, 15, 20 grand more for that house, they were able to go ahead and get in with that interest rate. And like you said, have the plan to go ahead and refi. And that's the thing, guys,
Hmm.
that you want to understand. You you
No,
don't
I
have to
can
be
I can make a
interest.
correction to that. Let me make correction to that. They wouldn't have been able to buy at all, but it was through your efforts, the education that we collectively provided them that permitted them to take the step to be able to get in the market when that window opened, and it worked for them. They were patient. They built a new construction house, and they
Yep.
probably, that house is, I don't know what it's going to praise for, but I guarantee it's probably going to be at least $45,000 more than what they originally paid for it
In less than a year. And that's
in
money
less
they
than
can
a
tap
year.
if they choose to, if they need to do certain things. If not, they'll be ahead of the market. And they're in the actual market too, where it's even hard to get single families. And
Oh
so
yes,
the
because
fact
we're
that
talking the
they're able to,
North Carolina market. Yeah, it's virtually
which is,
impossible.
and that's the thing that everyone wants you all to understand, that don't allow the media to scare you out of investing in yourselves, because the media
Right,
wants you to be afraid now that, okay, we got the interest rates, and now the other scare is, oh, and you got to pay your agent. Well, guess what, guys, we've always had certain type of representation in North
right.
Carolina. Don't allow those things to deter you from purchasing a home. You just have to get more information about it. You just have to have the right people in place that you can be able to get things done. And there's ways around it. If you are tired and you have outgrown your home, or you need to downsize. If you're sitting there with the equity, allow the equity to work for you to put yourself in a
Yes,
good. That's the whole purpose of having an asset. Your house is your asset. So allow that to
absolutely.
work for you. It's all about getting with someone that is like Ron, who can look. And one thing I like about you, Ron, is that you can look at a scenario and you can be able to look outside the box. Like, you can be able to look outside the normal parameters of what's needed, what's going to happen. Because you did that with our clients that just closed on Friday.
Right.
We had Guys, we have been told no by so many other people. And and again, like Ron said, that tenacity. I just keep,
Hmm.
Ron, I need you to Ron, I need you to
Hmm.
look at it. And finally, when he looked at it, he came back and said, I can make that work. I didn't know how he was going to make it work, but what I can tell you is they got the keys on Friday. They moved in. And so
Yeah,
things that people don't allow us to be able to do it. Don't discount yourself out because you're looking at interest
that's
rates
it.
being, and because and don't and another thing too, guys, and Ron, you might could be able to elaborate on this. Don't
Okay.
allow other people to talk you out of your dreams too, because I
Yes.
got to the point where I and some of my clients are on this call. They could probably contest to this. I got to the point where I was saying, like, hello, I don't know why.
Hmm.
Um, I got to the point also when I was saying
Hmm.
that, I'm sorry, somebody was calling.
No,
It was
you're fine.
calling. So my
Oh, no,
apologies.
it's okay.
I got to the point to whereas I was like, okay, if you're doing this, do not tell anybody else that you get in the house until you got in your home. Because when
Yes.
we were having problems is we would have people calling like, Angelina, this person is telling me that there's no way my rate should be at 5% because when they bought, they got it 3%. There's
Right.
no way I should be getting some sort of type of closing costs. There's no way I should have. There's no way. And and I have to tell people like, hey, and there's times when I've asked like, hey, get your family members on the line. I don't mind speaking with them.
Hmm.
But I have to remind people like, hey, when you purchased your home, it's a case by case scenario. When you purchased your home, the rates were at a certain time, rate amount. Certain things were going on in the market. This is what's going on in the market now. And there's certain trends. There's
Right.
certain trends, just like he stated, at that 2-3%, it was hard for us to get closing costs for people. it was hard for us to get closing costs for a client when you had someone who came in and said, "Oh, I got my money. I don't need
Right,
closing costs, and I'm going to give you an extra
right,
$10,000 over your sales price." I had one client where I literally wrote 15 offers for her.
right,
We actually got it
right.
ratified, Ron, when we did that home buying seminar at the Hilton. I got that
Yes,
offer ratified right before we got started,
I
and
remember.
and I literally had to beg that agent, like, "Listen, I need to get my offer in now." But I
Well,
say this to say that it wasn't as easy as one, two, three, as it
right.
is. And so, guys, if you're looking at buying a house, don't talk to anybody.
You
Don't
know,
tell
I think that it's a very relevant and real thing that you're saying because it's a couple things to it. Number one, I think you covered it well by giving insight to the fact that everybody's situation is different. You know, I have twin sons, and nothing about them are the same. You know, every when they were babies, everybody looked at them and thought that they would get them confused, not us. We didn't have that problem. They couldn't say that they were one and I'm this one and I'm that one. We knew who they were, but for others, everything was generic. So when you hear other people talk about, what type of loan they have or what the rate they got, you have to really understand that there's a DNA to every loan. What was their credit score? What was their down payment? Most of the time, people don't give you the back room information concerning their transaction. They are telling you parts of it, but not the entire story. And then also the other side of it, quite honestly, let's just be very transparent with it. You don't know if you're getting the truth or not. That's the other side of it. Because for one thing, one reason, we don't have any type of reason or motive not to give you the best that's available.
them.
There's not an incentive that drives a reason for us not to make sure that you're getting the best rate, the best loan type, and the best scenario. So you have to put a trust in that, in who you're working with, and hopefully, you've developed a little bit of a rapport and a relationship. One of the things that I think that is so important about this process is this. You mentioned about that ratified contract and about how many offers you put in. Well, the one thing that I've watched in terms of how you work is that you have credibility with other agents in the marketplace. And when you have someone that's working for you that has credibility among their peers, it really means something. That means you can trust what they're saying, because trust me, if you are not doing what you were said, then people don't mind writing reviews on you. They'll put things on Google reviews. I'm pleased to say that both of us have near perfect reviews. And by the way, when it comes to reviews, a study shows that most of the time the people that do reviews are the people that aren't pleased. So if you're getting people that are pleased with your service, excited about what you've done, and they took the time to survey you and told others, then that's for a true reason. That's not made up. And in our company, and so it is with Google, we can't erase reviews. If we get a bad one, it's gonna be there. They're gonna look at you and say, that's on you, because it's our job to communicate, it's our job to provide you with the best, and you have to believe us as the professional that's at work for you. That's our slogan over here. We are professionals that are at work for you. And let me ask this final question in terms of this conversation part that we're having now. If you had your tooth pulled and I tell you that I'm going to get mine pulled, I'm going to the dentist, I can't expect to feel like you feel. I can't expect for my outcome, it could be uniquely different because we are different people. We pay the same copay, we may have the same insurance or whatever, but the experience may be different. There may be things that I needed that you didn't need. There were things that they could do to me that you didn't need on your side. So everything is uniquely different. So you have to trust the process. You have to trust the people that you're doing business with. And by the way, if you don't trust that person that you're doing business with, ask your agent to get you someone else because
Yeah.
you have exposure to a network of people that are other Ron Williams that can do the same thing we can do. Now they're not going to do it as good as we can do it. They're not going to do it as awesome as we are, but hey, they could possibly get slightly close.
Yeah,
Shameless
and
plug. Yeah.
not only that too, I always, people always, because the question is, it never fails. I can go home, I can be at the store. As soon as people know what I do, they always ask, is it a good time to buy? Is it a good time to sell? And
Yeah.
my motto is,
Right.
if you can get approved, you need to move.
Yeah.
Because you can always refinance. Like within 6 months, you can
Right.
refinance. Like right now, with it being an election year, you know, can you also elaborate kind of sometimes what you've seen in past election years?
Hmm.
Because normally, like I was telling, I tell people, like what people don't realize that during election year, we're looking at the topics that are on TV now that our
Right.
candidates are speaking about. But it's also a back end to where policies being made. All that stuff trickles down to when you're
Hmm.
purchasing property, certain rules, things that we're able to do now that we might not be able to do later on, and vice versa. And so I don't think people realize kind of how the banks are involved on that aspect when it comes to
Absolutely.
purchasing part. So if you have
Yes.
been thinking about buying, you really need to get in before, because we don't
Yes.
know. What we do know is the person who's in there now is not going to be in there. And
Right.
so
That's what
you
we
have
do
two
know.
that's going to be in that office, and you don't know what type of policies, what type of agreements they've made with their lobbyists on changes they're going to make with these banks. And so I don't know if you don't mind just kind of sharing if you do know of certain things you've seen that has changed,
Hmm.
not just
Well,
interest.
and I'm glad you hit this part because, to me, it raises two major concerns. Number one is it should awaken us to understand that we need to know what's going on in politics because many times people think that when we talk about a presidential election, it's so big, it doesn't affect me personally. Yes, it does. It affects these loans. It affects, you know, I've been in the business, as you know, nearly 30 years now. I'm right on the cusp of 30 years. So I'm not that old. I just started that young. So let's get that straight. So let's make sure we clarify that, Angelina, because when I say 30 years, they're like, oh God, that's an old dog here. So let me I just started young. But when we started in this industry, let's take FHA loans just as a casebook example. The MIP associated with FHA loans were a lot higher then. So through different presidential administrations, they all appoint a secretary of housing. That's part of what a president appoints is a secretary of housing. That secretary of housing, depending upon their political views, will shape policy around that view. So there's one administration that believes that, hey, we believe borrowers need to have more money in down payment. So we're going to change the policy from having, 3.5% down, hypothetically, or 2% down. We raised it to 3.5%. We believe that with this same class of borrowers, we need to elevate the cost of mortgage insurance because they may foreclose at a higher rate. We believe, this administration believes, and so we're going to take the cost of that mortgage insurance up. And as a result, that makes that mortgage payment higher on a government-backed loan. Now, then there's another administration that came during the Obama era. The Secretary of Housing during his time in office cut the MIP to its lowest parameter, which is where we're at right now at 0.85. But remember, you remember this, there was a time when the MIP on FHA was not
Fell
the
off.
life of the loan.
Yeah, it
But
wasn't.
now it's the life of the loan. It would be like a conventional where it would fade away. All of that was changed by virtue of politics and the political structure that we were under during a certain administration, whether Democrat or Republican. But it matters. We got one administration right now that's talking about doing a $25,000 tax credit for first time home buyers. Wouldn't that be incredible? Wouldn't that be awesome to have? Because we know we got a lot of buyers. It was doing also the during the Great Recession back in 2008, 9, 10, and 11 that there was an $8,000 home buyer credit that people
Yeah,
were able to get. You bought a house, when you filed your taxes, you got back $8,000.
I remember
In
that.
addition, yeah, you remember that? So I think you tapped into a very powerful point because that's what controls housing. And we need to be thinking about that as we go to the polls this year. We need to be thinking about that as we examine what we desire for, our industry and what housing. By the way, we're so far behind in housing. We're so far behind. You know, builders are behind. The pandemic slowed it. There's not enough housing that's available. So it's always a great demand. So going back to your point of should I do it now? Well, what are you waiting for? Because we're already behind. There will never be enough supply in our lifetime. So the time is always now.
It's now. It's
Yeah,
now, and if you can, and so we'll have. Oh well, I'm only paying this, guys. I would love to be able to sell you a house that you only had to pay $900 a month for.
yeah,
If I could, I would, but it is hard now to get those because we're dealing with inflation. But I always
right.
tell people because like, oh, with houses, the payments are higher. But I tell them go back and just think about when prices were lower, your interest rates were, well, not interest rates, but your payments were lower. Think about the percentage of how much that took out of your payment. The percentage that we are all using is still the same. People make more
Yes,
and make
yes,
a lot more than before. It used to be unheard of to hear people say that they made 70,000, six figures a year. Now
absolutely.
that's
It's
the norm.
common.
Off making 50, 60 grand a year now. When that was when you was literally in your field for decades to get that amount. So yes, it's higher than paying $1,000. And can you have a mortgage payment? Yes, you can. If you have someone who has a whole bunch of equity, you're gonna feed it money down. Yes, you can have $1,000 mortgage payment. But at the same time, look at what it is compared to the percentage of because the percentage you guys look at is what, Ron? About what, 25? When we're looking at the percentage of how much your house should be compared to what you make. What do you guys look
It's
at?
your debt ratio should be less than 50% or up to 30. Well, overall debt ratio, we want it to be less than 50%. That's your house payment and any other bills that you have. So we're looking at your house payment, car payment, all of those things. Housing specific, we like for it to be less than about 31% at the max in terms of your overall income.
Okay.
So that's kind of the parameters, and that's stretched, but that's stretched because of what housing has gone to. But can I put another point into that part of
Yeah.
what you're saying about the payment? Um, Sheila just did a property, and we had to get a rent schedule on it, and it's about a 1,400 square foot 3 bedroom house, and the medium rent on that house was $1,800 a month. So
Mhm.
this is the part that I think that's being missed in the equation, because while we're talking about the escalation of purchase power or purchase payments, we also need to talk about the escalation of rental rates, because
Yep.
my mind is being blown by what I'm seeing in terms of what people are paying for rent. When I see people come in and they have in their application, I'm paying $2,300 a month and I'm paying $2,000 a month. I'm like, oh my God, this is really a
Mhm.
real crisis in the rental market. So this is why we work so hard to do what we do, is because we at least trying to help you build. If you got to pay it, then let's pay it and let's be able to call it an asset. Let's be able to call it yours. Let it
Yep.
help contribute to your retirement. Let's let it help contribute to your overall well-being, so that when you leave this world, which we will, that you'll be able to leave something behind that can outlive and outlast you. So, if you have to rent, I get it. I don't criticize people that that are in a rental situation, because you gotta have somewhere to live. But
Yep.
if
So
you but don't plan to remain in that posture. Let us help elevate you out of that posture, where you take that same money and reallocate it back into yourself and be able to have a win off of it, and not just see it go to just that current usage, because that's what rental is. It's like when you rent a car, you pay $80 a day for the current usage, but you turn it back in. But when you purchase a car, you pay that monthly payment and it's yours. You don't have to turn it back in. So that's the difference. So this is why we are feverishly working the way that we are, to try to help people obtain home ownership.
and I think also now I'm actually going to have somebody on too to talk more about this, of how your
Okay.
home can be an asset for you. For those of you all
Yes.
who may not have dependents, and the government is taking a lot of your paycheck. The government loves when you own something or when you
Yes.
run a business. So it's
Absolutely.
more than just having. And if you're like, oh well, I don't mind paying the $2,000, and I'm just using 2,000 as a round number,
Right.
guys, that's
Absolutely.
$24,000 a year that you're paying to that landlord. That's going towards their asset. And what they're
Right.
going to do is, after a while, they're going to call me and say, you know what, Angelina, I've paid this down enough. How much is it worth? They're going to get that money from me. But then on top, they're going to sell it and get even more assets from it.
Yes.
They're not doing anything wrong. That's what how
Mm-mm.
owning property does for you. So,
Yes. That's the
but Rob,
benefit of it.
yeah, there's all types of ways that you could get into the game. Don't discount yourself. I have so many people like, I got to get my score up higher. I got to save more money. Before you do all of that, allow us to take a look at it and see. Don't
Yes.
be discouraged by these rates. Don't get discouraged about this current policies. Allow us to look at it, because you may be in a better situation than you realize. And before you know it, 30 days later, you're in the house.
Yes. And can I add this to that, Angelina? Can I add one other really critical piece to it? Don't be discouraged by your own self. Most people are, I don't know what it is, and we all have fear of certain things. And fear is not, it's not a bad thing totally and completely. It is when it's out of control, when it controls your life. But people allow their fear or apprehension to talk them out of trying. The good part about the service that we provide, and they've heard us say this a couple times tonight, is that we've worked with people over a year. I've worked with people over 2 years, because it's about trying to get you to where you want to be. And we roadmap that. We've got ways of getting you there. So don't allow your own lack of confidence and lack of knowledge to talk you out of it before you ever get started. Just, my mom and my parents used to tell us back in the day, just go and ask them. Just go and ask. Just
Yeah.
ask, can you show me? And there are people that are willing to do that, but we can't make that first step for you. We can provide you with the information, but you've got to decide to do something. One of the little messages that I'm writing, my motivation to myself was recently, do something. Do something. Don't just sit there and do nothing, because you know the outcome of doing nothing. But if you do something, oh my God, there's a world of possibilities that are at your disposal. But if you defeat yourself by thinking, I can't, the most important thing that I want you to have, if you got income, anything else we can work with. Most
Yes.
people are so busy thinking credit, 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 credit. But what we really want, we want credit, because credit is the key that unlock the door. But I've got people in my portfolio that's got 800 credit scores but no income. But if I got a person that's got income, we can help put the other components together to help get you to the place where you want to be. But it all starts with you believing in yourself enough to say, I'm going to reach out. I'm going to call Angelina. I'm going to call Ron. I'm going to see where I'm at. And then we go from there. Because that's literally all it takes.
It is, and guys, I always tell people a denial right now doesn't mean that you can't deny. You may be denied, but you just delayed at this moment, meaning that we have things we have to work on. Anybody can be a homeowner. I truly feel that way. I would be doing this if I didn't. I truly feel that any and everybody deserves home ownership, to own something of their own, and it's just a matter of putting components together. If you have someone, they're like, oh well, they said theirs was easy. Well, theirs was easy because they made that sacrifice prior to applying. They went on ahead and saved. They went on ahead and said, you know what? I don't need this today. Let me put this towards this bill. They made sure they paid everything on time. If a sacrifice will have to be made, whether it's either before that time or during the process once you find out where you need, and just getting somebody to get it taken care of. And having, when it talks about credit scores, those credit scores does also impact your interest rates. So, yes, we need you to have a good credit score. We also need you to have funds in the bank, and we also need you to have that income, like you talked about. And if you have those things, even if they're not perfect, allow us to tell you if it's perfect, because we
Yeah,
don't need
yeah,
perfection.
absolutely,
No, the basic
absolutely.
perfection. You don't have to have an 800 credit score, six-figure job, and $10,000, $20,000 in the bank. You don't. You just need to allow us to take a look at it and see exactly what needs to be done. And the gentleman he's what, to my right, is going to tell you exactly what you need to have done. It's just a matter of
Absolutely.
getting it done and filling out the application. I have sent the
Yes.
application to so many people who don't fill it out. Yes, you have to have
Yeah,
your credit.
because
Fill
they
out the
defeat themselves. Yes.
don't hold.
Can I say something about uh the hard pull, the credit pull, the
Yes,
inquiry? Because Angelina, I believe there's so many misconceptions about that. Yes, a credit inquiry can bring your score down if you are using credit in an incorrect fashion. For instance, if you come and we pull your credit and you making your intention is to get approved to buy a house, that's your intention. The credit bureau does not penalize you for doing something. When you see that my score went from 620 and Ron pulled my credit, and wait a minute, I just checked Credit Karma and my credit is now a 615. Oh my God. And when you go into a panic attack, there's no need to go into a panic attack. The only thing the credit bureau does when you initially have your credit pulled, it's just looking to see what your intent is. What are you trying to do? Once it establishes what your intentions are, your credit score goes right back to where it was previously. Now, if you're using it without education and understanding, and you apply with Ron today, but you decide that I think I want to go and buy a car tomorrow, or I want to go and open up a store credit card. Once you begin to move from one industry to another industry, it makes the credit bureau say, I wonder what Ron is doing. What is that person doing? They applied for a mortgage today. Now they're applying for Belt's card. So
Yes,
wait a
Carl.
minute. We need to warn other lenders this person is doing some odd things. So they warn them by dinging your credit because you're having it pull in multiple different industries. But let's say you come to me and I pull your credit, you have a true intention to buy a home, and then you says, "Oh, Angelina, Ron didn't work for my personality. He's too nice. I need somebody meaner than him. He's too nice of a guy. So take me to someone else." And you go to Bank of America or you go to another mortgage firm and they pull your credit. That is no hit against you. The credit bureau give you the ability to have it pull up to 3 different times in the same industry without any negative effect on your score. It gives you the ability to shop without having to be penalized for it. Most people don't understand that. And so they're fearful of us pulling their credit because they think they're going to lose points. I worked so hard to get my score. I don't want to lose it. So that's what they incorrectly think. So it's no harm if you have a true intention of trying to buy a house, furthermore, buy a car, or whatever it is you're trying to do. As long as you don't get it pulled in multiple different industries within the same block of time, there's no adverse effect on your credit. I hope that makes sense.
It does, guys. I hope you heard that. Go if you have an application link, go and apply.
Go and apply. That's it.
That's
Let us get
go
you going.
so we can
That's
see what
it.
these done. Ron, thank you so much for coming on tonight.
Absolutely. I love
I
it. I
greatly
love coming
appreciate
on to your show.
it. Yeah, well, you're more than welcome anytime to come back. You just let me know.
All
Guys,
right.
if you need any more, if you want to talk to Ron or you like, hey, I need to talk to Ron myself, this is where you go. Speaking of applying,
That's it.
you could go to Ron's, this is his email and his website, apply.with ronwilliams.com. And then this is also his phone number below too as well. Guys, please, he is a plethora of knowledge. I love doing these Tuesday tune-ins. I know that not everyone, they may already be represented by another agent. It's all about just making sure that we get people into a home. So if you have an agent and you want to speak to Ron, guys, you do not have to necessarily work through me in order to contact the guests that we have on this show. I would like for you to, and I like the opportunity to, but it's not a requirement. Okay. I had somebody reach out to another lender about a program. That's why I put information here so that way you could be able to speak to these people who are
Absolutely.
really truly help people. Ron, we have so many people that have gotten in, said hello. I just want to just kind of show. We had
Sure.
Katharina that said hi. We had Nisi Boulder. You
Hello.
actually, and we had
Yes.
Mary,
Hello.
our lawyer partners. Marinelle, I gotta have you on. I
Hello.
think she.
Yes, you got to have Marinelle.
Well,
Marinelle
Marinelle
and
actually on
I
next
have
October
literally
the
worked
first.
together,
Yeah.
Angelina. Marinelle and I have literally worked together for 30 plus 30 years. I mean, uh, Marinelle is just one of the best attorneys because, again, there are title issues that we have to deal with. And
Mhm.
Marinelle has the knowledge of working through all of those things. And that's very important to our process. So she's a part of that team that we're talking about.
Yes, and she's when guys, I'm gonna have Marinelle on. We're gonna be talking about title and deed issues in regards to the segment's gonna be who owns your house because people we need to know. We want you to acquire the assets. We want to make sure that you acquire them properly too. We also had somebody come in and say they sorry it was late, but they was able to hear some great information. Ron, I thank you so
Excellent.
very much.
Thank
I
you
would love
so
to
much.
have Ron again, before the year's out. I can't believe I'm saying it.
Yes, yes, I'm with you on that. But just, it's nothing but a word. And we'll come back and cover some more great topics. And so we're here for you, no doubt.
Okay. And Ron, you can go out. You could be on while I'm doing this, guys. I like to always showcase a property that we
Yes,
have. So if
I
you
want to
all would
see
like to
this
see,
one.
let's see. I'm gonna
I
put it
know
on for
this
you.
client. I've done a loan for him, so I'm excited to see this.
Yes, well, guys, I want you to be able. This home here too is available for your showing. I'm going to go through and take a look. I thank you all for joining. Please make sure you join us for the next time. But I want you all to see. I have Ron's information out, but I do want you to see this property here that we're going to be looking at.
Let's
You may
see.
be interested.
Let's see. Wow,
Right.
that is amazing.
Thank you.
Wow, what an incredible house that is. Wow,
Well,
that is, wow. That's all I can say.
it's a beautiful home. It's available
And
now,
that's in
guys.
Columbia, and that's in
That is
Columbia, South
it's
Carolina. I
it,
cannot
it is
believe
in
that.
Columbia. in walking distance from a Target, might I add. It's in walking distance from a
Wow.
Target, right by the VA hospital. It's in a gated community. Guys, give me a call if you want to find more
Yes.
information. I have the lender right here that can get you approved for it.
We do $1 million loans all the day long. Absolutely.
Yes.
Absolutely. All the day long. All the
Yes,
day
it
long.
is.
And we do
It is.
$50,000 ones as well.
There you go.
We cover
We
all
do
bases.
all
Yeah.
bases.
Yes.
Well, guys, Ron, I'll send you that property too because you may have some clients that may
Please.
be interested. So I'm going to
Can
send
I
that
get
over to
that
you.
video? Yes. Can I get the video?
Yes, I'll send you the video. You sure can.
Okay.
Yeah,
And
please
I'll
put it on the
reshare that.
platform. Yeah. Yes,
Absolutely.
I'll send
Yes.
that to you this evening. And if they want any more, and guys at home, also all the bedrooms are en suites, so everybody has their own bathroom inside their bedroom.
Wow.
So that's something to kind of think about. Yeah, this is there. So,
Wow.
oh yeah.
That's incredible.
All
Next
right.
time
Well,
I come, you got to feature one of our Mongo properties, so so I can
okay.
shameless plug the company at the same time. Some of
I'll do
my
exactly that.
we got
I can do
first,
because I can say that you're
yes,
doing it. That way I won't get in trouble with my broker for doing
exact.
that.
There it is. Exactly. I don't want to get you in trouble with your broker because y'all are a great company, and I'm learning more about your company. So it's a great company. Absolutely.
It is. It is. Thank you so much. I'm glad I chose it.
Yes. Thank you for having me.
So thank you again, guys. Thank you all for being on. As always, you can always come to the Tuesday tune-ins. If you have not joined the Deals with Angie YouTube page, please go on the Deals with Angie YouTube page. Ron, including you too. Go on there. Deals with
Sure
Angie
will.
on YouTube. Like and subscribe. Well, subscribe and share. And it has all our Tuesday tune-ins on there. If you missed anything, if you need to go back and hear what Ron was speaking about, you can definitely be able to do so. And Ron, thank you both. Thank you so much, Ron, for being on and your time today. I know this is a lot. We
Absolutely.
greatly appreciate it.
No, it was my pleasure. I enjoyed it tremendously. And I thank you all again. And I look forward to speaking with your clientele as always.
Likewise, and guys, if you need any assistance as far as with selling or purchasing, please do not hesitate to reach out to myself. You can reach me at dealswithangie.com. You can also contact me. This is my information down here below. My email address as well as my phone number. We're here to serve. Service first. Okay.
That's it. Good
All right. You
night.
guys have a good evening, Ron. Thank you again. Have a blessed one.
You too. All right. Bye bye.